class of year 12. In the last class, we treated errors in trial balance, and from it, I was able to tell you that there are two classifications of errors. The first one is errors that would not affect the agreement of the trial balance, also known as error that the trial balance would not reveal. Then the second one is errors that would affect the agreement of the trial balance, or in another way they can call it errors that will be revealed by the trial balance. I've explained all the errors that would not affect the agreement of the trial balance, starting from the errors of commission, error of omission, error of principle, error of original entry, error of complete reversal of entry, compensating error. I've given you examples of each of these errors and how they can be corrected. And I told you also in the last class that it is the journal proper that is used to correct errors. I gave you examples of error of omission, that when there is a complete omission of a transaction was not recorded at all. That is error of omission. And I also gave you what error of commission is. That's error that involve when there is recording into the wrong personal account. Example, Moses account was recorded into Musa's account, or Bola's account was recorded as Bala account. That's an error of commission. I gave you all the insights. Now, there is one error that I did not include in the last class, and that is error of duplication. When we say duplication means you are repeating something that you have done before. You duplicate. Let me give you a clear example. Let's say a transaction goes thus: paid 5,000 naira by cash to Akinola. In a normal way you record this transaction is that cash account is to be credited, while Akinola, who is the receiver, is to be debited. A transaction now occurs. The amount of the transaction is 5,000. You have recorded it the way it should have been recorded, but you duplicate the transaction again by recording the same figure, 5,000, debiting Akinola with 5,000 again, and crediting cash account with another 5,000. That is a duplication error. That will not affect the agreement of the trial balance. The reason being that the debit side has increased with 5,000, and the credit side has also increased with 5,000. So by the time you are recording it into the trial balance, both the same amount would be recorded. So, but in the real sense, it has affected the ledger. So you need to record the transaction, correct it using the journal proper. How do you do that? You draw up your journal, and you are going to credit Akinola that was wrongly debited. You are going to credit Akinola with 5,000, and you are supposed to debit cash account that was wrongly also credited with 5,000. Once you have done that, you have corrected the error. It's as simple as that. But the major discourse of today, of this week rather, which we are going to take in the classroom, is to look into the errors that affect the agreement of the trial balance. Before we move to that, I think there is need for us to do what is called a practice illustration. A practice illustration. Learning should be from simple to complex. There is need for us to do a practice illustration of this, recording into the journal proper for us to look at this illustration. I think that's what we are going to look at before we move to the preparation, before we move to the errors that affect the agreement of a trial balance. The following information relates to Sayaolu Limited for the month of March 2017. Show the journal entries to correct this error. The purpose of this video is for you to watch it ahead of before the class so that you can be prepared. Please, let's take note of this. The purchase of furniture 500 naira has been entered in furniture expenses account. Sales of goods 250 has been completely omitted from the books. The payment of cash to Fauzia 3000 and be entered on the debit of cash account and credit of Fauzia's account. Purchase of goods 2005 from Mahmoud was entered in Muhammad's account. The sales account is under cars by 500 naira, also is rent account. First thing you need to take note of that you need to identify the errors that has been committed in each of these statements. Once you are able to identify the errors that have been committed in each of these statements, correcting it will not be a problem for you. So as you all know that the journal proper is what you are going to use to correct the errors. Now, looking at the explanation, the first statement is purchase of furniture 500 naira had been entered in furniture expenses account. It's a wrong entry. The wrong entry is this: furniture account was supposed to have been debited, but it was recorded in the furniture expenses account. What kind of error is this? You and I should know that this is an error of principle, because furniture account is an asset, furniture expenses account is an expense account, and both asset account and expenses account have the same nature. They are debited in the trial balance. So that's why it will not affect the agreement of the trial balance, but it has affected the furniture account and it has also affected the furniture expenses account. All you need to do is to correct the error that has been committed between the furniture account and the furniture expenses account. How do we do that? We were told that the furniture expenses account was used instead of the furniture account. And what has been the error committed? The furniture expenses account was debited, right? To correct this kind of transaction, all you need to do is to what? Debit the furniture account and credit the furniture expenses account. That is just the explanation of it, and that can be done by recording it into the journal proper. Now let's look at the second one. I'm going to do a rundown of all these errors one after the other before we now move into the preparation of the journal proper. Sales of goods 250 naira to Akin had been completely omitted from the books. This is an error of complete omission. So when you see an error of omission, all you need to do is just to record it the way it should have been recorded. Sales of goods 250 naira to Akin. All you need to do is just to correct it. You debit the Akin's account and credit the sales account. So you just record it in the way it should have been recorded. The next one is payment of cash to Fauzia 3000 naira had been entered on the debit of cash account and credit of Fauzia account. This is called error of complete reversal of entry. Payment of cash to Fauzia. Fauzia was the one that collected the money, so he's supposed to be debited. But by the time you were recording it, you went ahead to record credit side. You credited Fauzia account and debited cash account. This has to be corrected. So how do you do that? I mentioned to you in the last class that whenever you see an error of complete reversal of entry, to correct it, you have to multiply the amount involved. You have to multiply the amount involved by 2, and you have to record the transaction the way it should have been initially recorded. So you multiply it by 2, that is 3000 times 2, that's 6000 naira, and you do the correct entry by debiting your Fauzia account with 6000 while crediting cash account with 6,000. So that's that about complete reversal of entry. Purchase of goods 2,500 from Mahmoud was entered in Muhammad account. This is an error of commission. You and I know that error of commission is when you record into the wrong personal account. So this was meant for Mahmoud, but it was entered in Muhammad's account. What you need to do is to record it by correcting Muhammad's account, who is not entitled to it. So Muhammad's account has already been credited. So the next thing you need to do is to debit Muhammad's account and credit Mahmoud's account, the original owner of the transaction. Okay. The last one, which is sales account, is undercast by 500 naira, as also is rent account. This kind of transaction is what is called error of compensation. We all know that sales account has a credit nature, while rent account has a debit nature. So if there is an undercast of 500 naira from sales account, that means our sales account has reduced by 500 naira. That is, the credit side of our trial balance has reduced by 500 naira. And rent, the same vein, if there is an undercast of rent, it means our rent account has reduced by 500 naira. Since rent is also a debit nature, it means our trial balance has also reduced on the debit side by 500 naira. So if there is a reduction of 500 naira on the debit side and there is a reduction of 500 naira on the credit side, you can see there is no way the trial balance would be affected. So there will be an agreement, but in the real context, you have made a mistake in the sales account and you have also made a mistake in the rent account, which has to be corrected. How do we do that? If there is an undercast of 500 naira, all you need to do is to record the transaction by putting 500 naira multiplied by 2. There is an undercast. When we say undercast, it means you reduced it. So to correct that, you have to put it back the way it should have been recorded. So sales account has a credit balance and other accounts means the credit side has a shortfall. Rent account also has a in the trial balance and other cases in this situation also mean a shortfall on the debit side. This is just an explanation of what I've explained earlier. Therefore, a shortfall in the debit side and the credit side of the same amount will make the trial balance to agree, but the two lines are affected. Hence, the need to correct it. This is done by simply recording the shortfall by crediting sales account and debiting rent account in the journal proper. So the amount that involved is 500 naira. The amount that has been reduced, you have to put it back. So you put that the 500 naira, not 1,000 naira that I mentioned earlier. You have to put the 500 naira back in the rent account and put the 500 naira also reduced also back into the sales account. So we know that sales account is credit while rent account is debit. So you credit your sales account with 500 naira and debit your rent account with 500 naira. That is the correct error of compensation that has to do with undercast. It can also come in the form of overcast. So, but the question here does not tell us to do that. So cash payment of 450 naira to Ahmad entered in two accounts as 540. This kind of transaction is error of original entry. The amount involved is 450 naira, but you have made an error of 540 naira. You recorded it at 540 instead of 450. You need to find the difference. The difference here is 19 naira. So that 19 naira has to be corrected. So cash payment, the normal entry is Ahmad 450, while cash is 450. But you wrote 540 instead of 540. That is, you have increased it by an amount of 19 naira. So take note of this. This has to be corrected. So how do we do this? You correct it by cash. You debit your cash 19 naira and you credit your Ahmad's account with 19 naira. After you have done all this, You now have to put everything in a journal proper. Everything has to be in a journal proper and well spelt out, putting the narration and all that is